Matt, thank you so much for joining us here at SuperReturn International.
Yeah, thanks, Emma. I'm happy to be here. God, it's great to be in person again.
Absolutely, and great to sort of see what this industry is doing in terms of coping with these quite tricky economic times we're living through.
I'm so impressed and constantly amazed at the fluidity, the nimbleness, and the willingness to evolve of the private capital space, both credit and equity and everything in between. It's really the most creative place in all of finance, and it's all gathered in one room here.
And also has such a history of success in the most sort of difficult situations in a way, doesn't it, as well? This sort of dislocation actually can bring opportunity.
Well, absolutely. I mean, especially for value investors. You know, I think that there is a period of time, and I've been doing this too long. I've been doing this since the 90s. So I've seen quite a few cycles, right? I mean, just to name off the top of my head, there was the telecom competitive, bubble, inflation and bursting, and then the internet bubble inflating and bursting, and then manufactured housing, which was a precursor to the subprime, which was, a precursor to the sovereign debt crisis, which was a precursor to COVID. So, I've lived it, and I've been investing actively throughout lots of different dislocation periods, and this one feels a lot like 2009, when I put a ton of money to work, and it was a very, very attractive, nominal return and IRR for the risk that we were taking. It was really a great investment environment, as long as you're not overwhelmed by problems in your back book. And we're not, and that's somewhat surreptitious, somewhat by design. But our strategy is focused on operating the businesses, and if you can operate a business in this environment, which my partners and all, we have, you can mitigate a lot of the risk that you would otherwise, be taking on when it comes to management and operations.
And that's what's unique about private equity. That's why they've managed to succeed in those difficult times, you think?
Yeah, I mean, the degree of control, we're not known for being patient people, but we're more patient than the public markets. And the ability to see through cycles, I think, is a distinct advantage of private equity over public markets, because price is, what you pay, and value is what you get. And there are times when the price of something is well above the value of something, and there's times when the price of something is well below the value of something. I think European financials are in an epoch where the price of them is below the value of them, if you choose correctly. And while I'm not an expert in every other sector, I have invested for decades on many different prestigious platforms, and I know that to be true in my career in life. And if you don't believe that, read Seth Klarman's Margin of Safety or any of Warren Buffett's letters. There's a theme in there, which is value investing is something that you can build a firm around, right? So that's what I thought about when I was putting FSC together, is what is going to stand the test of time? What's going to be around as long as, the stalwarts of the industry? And it's people that are focused on value investing, what they can control, and the trendier stuff. And I would say fintech is, trendy, or was trendy. Cryptocurrency was trendy. That trendier stuff in these, environments of dislocation, that kind of evaporates. And then you come back to what you can always rely on, which is buying something at a price below its value.
And that's certainly the case in a situation where we're not sure what's going to happen with inflation and interest rates too.
Well, again, by accident or design, and I'll say design and take some credit this time, although last time when I spoke to you, I did cop to the fact that it was probably more accidental. The industry that we're focused on is financial services in Europe, right? So of all the economic sectors, everyone else is a borrower, right? So their cash flows are hurt by a rising rate environment, and a rising rate environment is what is created by inflation, which is the exact environment that we're sitting in today. So when you look across the investment landscape, I would side with private as opposed to public. That's just me. I would go with value as opposed to, trendy, but that's just me. And of all the sectors, I would be focused on financial services because they are a net beneficiary of rising rates and inflation. And I can't think of many others. And then when I'm thinking about geographies, America is way more valued on a entry multiple basis than Europe is. This is where the value is. And that's where we're focused.
And do you require a really solid team of talented people behind you to be able to do this sort of sector specialisation as well? You've talked about sort of your colleagues that you've worked with for as long as you have. How important to you is it to retain those people, and how do you do that in this environment where there is this sort of talent deficit going on?
Look, fortunately or unfortunately, our strategy requires a lot of experience, a lot of talent, and a lot of having lived through the cycles that I just sort of talked about. And all of my team, and I'm lucky to have a team like we do, have experience through all those cycles. And that experience is in financial services, in Europe, in operations. So, these are the guys that were in the crucible in the global financial crisis, so this team knows what it's doing in these difficult environments. And this team is going to make a lot of hay over the next several years, helping improve the financial services companies in which we invest from the inside, both from a technological perspective. They tend to be behind, right? Your user experience taking an Uber to your bank branch and then trying to, say, take out cash or get a loan or something. The Uber experience and the bank experience are jarringly different, right?
Yeah.
You're never going to get that fluid with financial services because of the regulation and the oversight, but there's a long way to go from that bank branch experience or that insurance, distribution branch experience and Uber. And I'm not saying you have to get all the way there, but if you just get part of the way there, you should be able to capture 20 or 30 years of technology-enabled value creation through your value-focused middle market private equity strategy.
So it sounds from what you're saying, that's where you expect to see the most progress made in the next few years, is that technological advance in those sort of financial services businesses?
And again, that's why you have to have such a big experienced team, is because upgrading management information systems, is very important because it gives you another margin of safety, because now you have management teams that are informed by relevant, timely, actionable, and complete information. And that's what digital transformation allows you, and things like the cloud and data inquiry and big data and machine learning, all those things you can use to utilize the treasure trove of data that the incumbent financial services companies, whether they're insurance banks, asset managers, payment businesses, point of sale, they have a treasure trove of information, and a lot of that in Europe especially is unutilized. And that's a gold mine. And that's why we're focused on the incumbents, the old companies, subsidiaries, non-core, carve-outs, because they will have been in business for a long time. They will have accumulated a lot of data, accumulated a lot of customers. And when you're paying 50% a book, you can do that with an old business, like our first deal, Ufasa, is 38 years old. Provides loans to pensioners buying in-home convenience products that are quite expensive. And there's a good reason for that company to exist. It's existed for a long time. We acquired it and improved it, and that's kind of our model. And the ability to do that in the middle market in Europe, especially given the number of countries and regulatory perimeters, is so widespread. There's 40,000 licensed financial services companies in Europe. And that's the master licenses alone, not even the sub-licenses. So when you think about the opportunity set and the sector, it's massive, right? That's the one thing that it's hard to sort of, for Americans to get their head around, and as both a Brit and an American, I spent a lot of my career translating Europe to Americans. I did that at Madison Dearborn in the London office. I did that at Cerberus in the London office, Atlas in the London office. So if anything, I've developed a bit of a specialty in helping Americans understand Europe, because I've sat working for American firms in Europe for so long. And there are blind spots, and the size of the financial services industry is one of them. It's hard for Americans to get their heads around, the assets in the incumbent financial services system are, 3 or 4 times the total GDP of Europe, which is a massive amount of GDP. It's on par with America. But America would be like, under 50%. So it's just difficult to understand, because America has a capital markets that's much larger and more uniform than Europe. So then, you rely more on the permanent capital vehicles for your credit and economic growth, and it's just a different economic setup.
So vast opportunities from what you're saying in that digital transformation space in Europe still, because we sort of think of that as something that was happening a decade ago, but you're saying there's still the opportunity there, and there's still the people that are lagging behind. And
people tend to run down the regulators and the political class that are largely responsible for financial services in Europe as being very conservative. But on the other hand, you're dealing with hundreds of millions of people in many different countries and legal and regulatory environments. And I think they're totally justified. So I think the regulatory acceptance of the technologies that are used in an Uber, technology always is a step ahead of regulation, politicians, and lawmakers. So given the fact that regulation politicians are kind of at the center of the sector in which we invest, they have been rightly conservative in allowing new technologies like cloud-based data storage and cloud-based systems processing and point-of-sale lending into their regulatory perimeter, but they have. Okay, they were conservative, rightly conservative, but they're there, right? So now is the time to bridge the gap between the financial services sector and the user experience that you have in all the other sectors of the economy.
So just finally, if people listening to you at this conference and chatting to you this week were to take one message away with them from having had a conversation with you, what would you hope it would be this week?
Value investing in what appears to be the cheapest sector that will benefit the most from a rising rate environment. And it's best done in a private equity context. And that's the product, that I'd like people to ask me about.
Thank you so much. Great to talk to you. Thanks for sharing your insights.
I appreciate it.